All right, how's it going, everyone? My name is Amos, and we're going to be taking a look at all of the different companies and businesses that are going to be reporting their earnings this week. And earnings, you can kind of think of it as like the financial progress report for the past 90 days. And if the company is going to make any revisions to their guidance and future outlook. And if you are invested into one of these companies, it would behoove of you to keep up to date with how the business is doing. And by the way, if you can't tell already, this is going to be an absolutely laid-back environment, different from the usual content that's a little bit more high speed. You can think of it as like two dudes chilling butt naked in a jacuzzi, and we can play footsie in the water together. It's going to be talking to you, okay? But before we get into the earnings, I think we should talk about this, right? As you can see on your screen right now, this is called a heat map. And it's representing the S&P 500 and how they closed on Friday. Like Amazon, for instance, my goodness gracious, negative 8%. Nvidia, negative 2%. Basically, the entire stock market, had a pretty drastic correction and pullback from its all-time highs because of several factors, including, I think this is the most important one, the July jobs report was pretty weak. Okay, so U.S. companies and employers added only 73,000 jobs in July. The analysts in Wall Street, they were anticipating at least 100,000 at a minimum. They hit only 73,000. It shows that the economy and businesses slowing down. And to make matters worse, they're going to go back and revise the May and June numbers and decrease it by 258,000. Which all adds up to the unemployment rate going up to 4.2% and the labor force participation also weakening, which means that we have a cooling labor market. And then number two, as to why the stock market is selling off right now, the August 1st tariffs are into effect. And it ranges between like 10 to 41%, depending on who you are and what kind of trade alliance you have with the US. I think the ones hit the hardest: Canada, India, Taiwan, Korea, Japan, and the EU. So that's not good, because if the US is putting tariffs on everyone, that's going to reduce the amount of shipments happening, because you basically, as a business or a company, you want to wait until tariffs are off the table again, because as they say with this current administration, whenever there is a tariff that's introduced, it's only a matter of time before it goes away. So why ship your goods at a premium of about paying 20 to 40% extra when you can just wait a little bit, which means the economy and the economic activity across the world, it is going to slow down. And then number three, because of that jobs report not being what I guess the presidential administration wanted to hear, they actually fired, who is this, Erica McIntyre? I butchered the last name, but she was the Bureau of Labor and Statistics official that's responsible for the jobs data. Apparently, they were saying it was fraudulent numbers and they had to get rid of them. So I think that introduced a lot of anxiety, right? Because if the current administration can just cut people like that, if you're not happy with the objective numbers that are being posted, then it just kind of makes the rest of the world be like, okay, what else is going to happen? Who else is going to be fired? And then the last reason as to why the stock market ended the day red for last week is inflation. So even though inflation is not skyrocketing like it was in 2022 or even a year ago, facts are prices are still going up. So rent, insurance, healthcare, stuff like that, still super expensive. So the tariffs that were introduced this past week, it's going to make everything just that little more expensive. So now let's go ahead and do a quick recap of last week's watch list and the ones that we had to call out for. And the first company that I want to talk about is Waste Management, and believe it or not, beautiful earnings as usual. And they even raised their guidance for the rest of the year. So looking at it broken down on a quarterly basis, June 30th, 2025, $6.4 billion. So year over year from the exact same time period to Q2 of 2024, it was an increase of 19% for their top line. A garbage disposal and recycle management company. And for their net income, it was an increase of 6.5% year over year. I'll keep telling you guys, the garbage companies like Republic Services, Waste Connections, and Waste Management, buy and hold forever. Forever. When it comes to the stock market, I don't say that lightly because businesses and the operations and the landscape of certain industries and sectors, it changes. Meaning who's hot today does not necessarily mean it's going to be hot tomorrow or 5 years from now. But when we talk about the garbage disposal services, friends, family, it's always going to be in demand. And the second company that I want to talk about, this is a dividend investor favorite. Some of us hate it, some of us love it, and it's United Parcel Service, aka UPS. Year to date, they're down by negative 32%. And I will say this, for their earnings, it was pretty okay numbers. Break it down on a quarterly basis. Their revenue, they posted $21 billion, and then for their adjusted EPS, $1.51 per share. However, their future outlook was pretty bad, horrific. As a matter of fact, the beginning of this year, around January, I made the very hard decision to pull the trigger and just sell out of them completely. I think at a small loss because my confidence in UPS, I'm not optimistic of their future because when we take a look at their dividend profile right now, the payout ratio is a 97%. Not only that, the dividend is only growing at a rate of 0.6%. And whenever you see a company where their numbers are stagnating or even falling, for me, that raises yellow and red flags. Like, can they keep up with the growth story from the past? And when it comes to UPS, obviously they can't, right? I think during the pandemic, they had a huge tailwind, meaning a bullish sentiment because everybody was they were ordering everything off of the internet, right? E-commerce was the name of the game in 2021, 2022. But now that the world is back to normal, case in point, check out fiscal year 2021. Their EPS, this is the earnings per share, was $14.68. Since then, it's only, here, look at it visually right here. It's only been declining year over year. For me, that's pretty darn bad. Because if the revenue is stagnating, or if it's declining by a little bit, at least make the EPS stable or be growing. But in the case of UPS, that's just not happening. The profitability for them is a hot mess. And as a reminder, the EPS is so freaking important. The bottom line, the profits per share. Why? Because if the EPS is shrinking and is not growing, then if we hop on over to their dividend profile once again, this is not going to be growing as well. Because this right here, the payout ratio, is the percentage of the EPS paid out towards this dividend right here. So if the EPS is not growing, nor will the dividend. And for UPS, I'm not trying to be a hater, right? I do like them as a business, but as an investment, guys, it's just, I think they're trading for, exactly what they used to be prior to the pandemic when they had those tailwinds. I'm just not a fan of them as a stock. That's all. And the next company I want to talk about is Proctor Gamble, ticker symbol PG. This is a conglomerate that has so many different brands under their portfolio. If you go to the grocery store, the laundry aisle, the shaving aisle, the shampoo aisle, it's all Procter & Gamble. It's a consumer staple. And not too long ago, I think about 3 months ago, I started to dollar cost average into them. And I really like them, right? If we take a look at their performance, all time, 8,700%, absolutely a dividend compounder with cheese, slow and steady. This is not an NVIDIA. This is not an AMD. But it's definitely the type of investment that, dare I say, it might be into that same category as waste management. A buy and hold forever. But anyways, their earnings, how did it go? Their organic sales were up by 3% year over year, just like 3PS, also up by 3% year over year. And when you look at it from just the revenue portion, then it's only up by, break it down quarterly. 1.7%. But organic sales is a different metric. And their guidance for the rest of the year, I think that was the nail biter. Everyone was like, okay, is it going to be lowered? Are they going to make less money? No, their guidance remains intact. And I think what caused the small sell-off for Procter Gamble past 5 days, they should be down. Yes, negative 4.8% is they made the announcement of leadership change. Now, usually, if the company is guided by a terrible leader and it's like, hey, the CEO is going to exit, the stock does have the potential to rally like 20%. But in this case, the Procter & Gamble CEO was actually a pretty solid leader. And to hear that he was stepping down, yeah, Wall Street did not like that. Because when you introduce new leadership, there's a lot of uncertainty. And then it begs the question of like, what's the consistency now? What's going to change? What's the value add? Because usually when a new leader comes, they want to make their presence felt and they start changing things that don't need to be changed, right? Another example that I can think of right now is Berkshire Hathaway. This is Warren Buffett's company. He's stepping down and they introduced leadership change by the end of the year. And look what happened to their stock ever since they announced that Warren Buffett was going to be stepping down, right? So that's usually what happens when there's a good leader and there's a transition to someone else. And by the way, the new CEO, dude, I'm going to butcher this name. You're going to have to forgive me, okay? I'm an ignorant and a dumb American. But his name is Shailesh Jejurikar, and he's going to be stepping in effective January 1st, 2026. He's currently the chief operating officer at Procter & Gamble. So I don't think it's going to be that drastic of a change. Just like Chipotle. When Chipotle lost their CEO to Starbucks, I think there was a lot of fear, uncertainty, and doubt. But for me, I was like, dude, the guy stepping in for him is also a part of the executive leadership team at Chipotle. So, and oh, by the way, the new CEO coming in for Procter & Gamble, he's an Indian dude, right? And I did some research 2 days ago about the diaspora of Indians, and now they're the world's biggest population. About 1 out of 5 humans on planet Earth, their ethnic origin is Indian. So I thought that was a pretty fun fact that they're out there. Yeah, the next one we are going to talk about is Humana. This is a health insurance giant, but I think what separates them from the other health insurance players is that they cater towards the United States military in that they do TRICARE coverage for one half of the network. I forgot if it's the TRICARE West or TRICARE East, but one of those. And they posted their earnings, and believe it or not, it was actually pretty darn good. They beat on both the top and bottom line. As you can see, if we break it down on a quarterly basis, their revenue was up by 9.6%. Yeah, some people say, oh, health insurance is a dying industry. Then riddle me that. How the heck is their revenue still growing by 9.6%? And then for their bottom line, well, it's down negative 19.7%, but they beat the analyst expectations. So I'm not going to sit here and lie to your face and be like, oh, it went up year over year. But as I said, they beat the expectations. So as a result, Humana, I actually listened to their hour-long earnings call with their leadership, and the mood, the tone, the language, completely different from United Health's. I tuned into their earnings call as well, and it's just, I don't know, as a shareholder of United Health, I'm kind of jealous of Humana. But anyways, Humana raised their full-year adjusted EPS outlook to $17. So they're saying that they're going to be able to finish the year. Hold on, let's do this. Let's scroll back up here and make it annualized. Right now, it's $13.04. They should finish the year at $17. So from fiscal year 2024 to fiscal year 2025, that's going to be a huge increase. So it just goes to show that not all health insurance businesses and stocks are suffering. I also think CVS is doing pretty well. I remember I bought into them at their 1-year low, and then I sold out on them when they hit $65, $66 a share. I believe in the health insurance space, and right now, my conviction is with United Health. But United Health right now, yeah, things are not looking too hot. Their numbers, their profitability, their metrics are declining, whereas like for Humana and CVS, it's going in the other direction. It's not a good feeling, but I'm still not going to just randomly panic sell. We don't do that on this channel. The next one I want to talk about is Altria. They are a tobacco giant. They are one of my holdings. I want to be transparent with you. They are in my portfolio, and they also posted their earnings. Take a look at their EPS. It was up by 8.3% year over year, and for their revenue, it only went up by 0.25%, and they raised their guidance for the rest of the year. I'm going to be honest with you. When it comes to Altria, there's so much to like about this company. A 6.6% dividend yield that's qualified, absolutely sustainable, and they're growing their dividend, this number right here, at a rate that is higher than the historic rate of inflation. So I'm not going to be selling them anytime soon. Sustainable dividend profile, and they also have a very decent, or actually it's above average, free cash flow situation. Back in 2015, we're talking about $2.86, and now it's $5.16 of free cash flow per share. And when I think about Altria, here's what we have to understand. If we jump on over to ticker symbol PM, Philip Morris, this is their rival. They do the exact same thing that Altria is doing. They sell tobacco products. And when you take a look at their numbers, their trading multiple right now is a 31. Forward trading multiple is a 20. If we go back and look at Altria, theirs is 11.9. And the future trading multiple is 11.2. So when we think about Altria, I think right now they are absolutely undervalued. And I think Philip Morris is an example of what Altria could potentially look like in their future. I think once Altria acquires or rolls out another smokeless nicotine product, I think Philip Morris, they're the parent company of Zyn. Yeah, Zyn. And I think that's what's carrying the team right now. I think once Altria has a product like that, they should be trading at a premium, like $85, $90 a share. But as of right now, they're still in the shadows of Philip Morris. And Philip Morris is absolutely crushing it, right? Their performance past 5 years, 112%. Their dividend profile, 3.3% dividend yield, but their payout ratio is not as cute as Altria. And the last company that I want to talk about here today is Apple. And when we think about the Mag 7, I think right now, I still think that Google is the most undervalued, but I think the upside for Google right now, we're potentially looking at maybe 20 or 25 more dollars. Because I think the intrinsic inherent worth of Alphabet is about $220, $225 a share. And I think Google is now flirting with the territory of hitting like $195, $200. But for Apple, I think they're the second most undervalued in the Mag 7. I know when I say that and you're looking at their PE ratio, you're probably calling me stupid. But I think Apple's future is still pretty darn bright. And I remember I was watching some of my peers, reading some articles on Seeking Alpha, Wall Street Journal, and everybody has the same opinion, right? It's like an echo chamber. Everybody believes that Apple is cooked. Their story is over, and the dream is now going to be a nightmare. And they even, confess that they're selling out of them, that they don't believe in them anymore. But for me, I actually doubled down on Apple earlier this year. I picked up a few shares. My biggest conviction was Nvidia, Microsoft, and AMD, but I did buy a little bit of Apple as well. So how did their earnings go? Well, their EPS was up by 12% year over year, and their revenue was up by 10% year over year, which if you think about it, look at the past, right? Sometimes their revenue only goes up by 4%, 6%, and in 2024, it went down by negative 4.3%. So this quarter, Apple absolutely crushed. And the reason why I'm paying so much attention to the revenue is this is what investors refer to as the top line. It shows you objectively whether or not a company is growing. Because if the amount of gross sales and revenue that you generate is increasing, then on paper, the company is growing, if that makes sense. And in regard to their AI involvement, I think that's where a lot of investors feel bearish about them because they're not really, they're not a part of the tip of the spear. Like Siri, yes, it's been around for a while, but Siri's not that good. As a guy that has an iPhone, I actually have Siri disabled because I don't really think she's accurate. But Apple did have an answer because they are behind the race in comparison to Google, in comparison to Microsoft, and especially in comparison to Amazon and Tesla. However, during this earnings call, Tim Cook and the leadership team at Apple, they hinted at the fact that merger and an acquisition is probably going to be in the near future. They're probably going to buy out a competition that is a huge player in the AI space so that they can integrate it into the Apple ecosystem. And you might be like, that's not good. Why couldn't they do it on their own? Why couldn't they just develop it? Friends and family, acquisitions is a good thing. Sometimes, think about Proctor Gamble, right? They have so many different brands and products under their umbrella, not because they invented it, but because they bought out the competition. If somebody is making a better shampoo than they did, they just went ahead and just bought them out. It's like, okay, you're part of us now. Somebody made better diapers than us? Okay, we're just going to buy you out. Now you make our diapers. Case in point, Apple is going to be doing the same thing. And you might be like, do they have enough cash to fund that buyout? Well, let's figure it out. Take a look at their free cash flow situation. Scroll down right here. They're currently generating $96.1 billion of free cash flow. Are you freaking kidding me? That means after funding for everything related to their operations, the amount of cash left over, the free cash flow, $96 billion. What I'm trying to tell you is there's so many companies that don't even post $96 billion of revenue. But for Apple, they have $96 billion of free cash flow after accounting for their operations. And when we think about their cash situation, on the books right now, in a liquid situation, certificate of deposits, money market funds, high yield savings account, they have $55.3 billion. So if they do decide to buy out an AI player, I think their stock price is going to shoot up. And need I remind you, about a year ago, they were at about, $228, and they hit a high of about $260 a share. Right now, they're at $200, and past 1 year performance is negative 8%. And I remember for the longest time, a lot of people were dogging on and poking with a stick to the ribs of Microsoft because their past 1 year performance was very similar to Apple. And then look what happened to Microsoft, right? Now their past 1 year performance is positive 25%. When they were like right here, people were like, I hate Microsoft. Why is the stock not moving? I think of the same thing with Apple. I think Apple's turn is coming. I think once they make that announcement that they're going to buy something out, okay, you're going to hear it here first. I cannot tell the future. I'm not a genie in a bottle, but I truly believe their stock price is going to shoot up to like 230, 240, around that territory. I don't know if that's going to happen. I just pulled that right out of my butthole. It might not happen, but that's what I think will happen because the market moves in a very emotion-driven way. Like, oh my gosh, now we're bullish. But if you think that the story of Apple is over, I fundamentally disagree with you, okay? And I think the biggest growth driver for their success is exactly what we talked about, the services arm of the business. That includes Apple TV. Because mind you, Netflix only operates a digital streaming platform. And for them to be trading at a 50 PE, $1,000 a share, you tell me, why can't Apple see the exact amount of success and have a premium baked into their PE ratio like that as well? They also have Apple TV. And apparently Apple TV has been cooking. But it's not all rainbows and sunshine because one thing to keep in mind is that with the new tariffs that are officially in place since August 1st, I think it's really going to hurt Apple. Because when you think about the other Mag 7, they don't really have a physical asset that they're selling, except Tesla, but they manufacture here in the US. But when it comes to Apple, dude, they make every single one of their products outside of the US. Every single product. The MacBook, the Mac Mini, iPhone, iPad. So the cost to do business, I think their margins are going to be crushed. I'm going to be completely transparent with you. So I think the only way they can make up for it is by increasing the prices of what they are selling or by making so much more revenue that the margins getting squeezed will be barely felt. Because right now, their net income their profits per share, the bottom line per share, $6.57. So we'll see what happens. For me, I'm not going to sell at Apple. I chuckled when everyone else was saying, oh, Google is cooked, Apple is cooked, Microsoft is cooked. Dude, there's a reason why the Mag 7 is the Mag 7. Do not bet against them. Actually, the only one that I don't feel particularly bullish about, even though I would love to own one of their products, is Tesla. This is the only one in the Mag 7 where if people say, oh, I'm selling out of them, I can understand. Because unlike Apple, they are fine. They hit their peak last year and they're shrinking. Why do I think they're shrinking? I think Elon Musk made a grave mistake of alienating his customer base by being political. So this one, even though I would love to own a Tesla, I don't even have a car. Dude, I ride a bicycle around Japan. But even though I would love their car or product to be in my life, as an investment, I don't know, guys. It's just, not only is it super volatile, but with the political involvement, I don't know about that, Chief. I'm gonna tell you right now, that was a pretty long-winded introduction, but we also do have to do the recap, right? To follow up on what we talked about and circle back to the call-outs. Now, on to this week. Let's just take a pause. Take a look at your screen. These are the heavy hitters, the biggest market cap represented. We're gonna go a little deeper than what's on your screen, but these are the big boys in the AI space that are reporting, such as AMD, Palantir, SoundHound, Arista Networks, and then there's also like the industrial players like Caterpillar, and is there another one? Eaton, and then there's also a ton of pharmaceutical businesses that are reporting, but I'm gonna kind of glaze over that part because I don't know if you watched that video or not, but I uploaded a video earlier this year talking about how I used to be a strategy leader in the biggest, or I don't know if they're still the biggest, but one of the biggest pharmaceutical companies in the world. And just getting to see the stuff behind the scenes and having line of sight of all of the pipelines and everything like that, I'm going to be honest with you, dude, I'm really bearish on the pharmaceutical space, especially with where the patents and the transparency of prices are going. I would stay away. That's what I'm doing. I'm personally a man of my word. I'm staying away from every pharmaceutical company. Like, if you have industry experience and you understand the landscape and you see that it's poo-poo, but everyone else thinks it's golden, wouldn't you still hold true to your experience? Like, if you know from firsthand something is poo-poo, you probably would stay away, right? And that's exactly how I am. And there's also going to be quite a few blue chip stocks like McDonald's right here, Disney, Wendy's. I don't know if Wendy's is blue chip, but there's Pinterest, Block, aka Square, aka, are they Venmo? No, Venmo is PayPal. And there's also Marriott, the hotel chain. And there's Clover, which is a fintech. Are they fintech? But anyways, they're kind of like a Medicare, Medicaid startup company that I think they're going to be delisted anytime soon. All right, now let's dive a little deeper and look at each day of the week. Oh my freaking goodness. Monday, there's 138 businesses reporting. Tuesday has 306. Wednesday has almost 400 companies reporting. Dude, that's going to be a really busy week, especially for anybody involved in the financial or Wall Street. That's a lot of companies you're going to have to monitor. And just in case you're paying attention to your screen, I made the mouse a little bit bigger so that people can follow along. Let's see, Monday callouts. I think Palantir, I think that ship has sailed. To be honest with you, if you're thinking about buying into them, at $155 a share, trading multiple of 630, to be honest with you, I think there's just too much downside versus upside. I think the proposition of them going up to like 160 versus them going down to 100, I would argue the chances are higher that they would fall down to 100, because when your PE ratio is a 640, they're priced to perfection. What do I mean by that? That means if there's any setback, if there's any stumbling block, if there's any, on the earnings, if anything is short of beautiful and gorgeous, they will go on a massive sell-off. Because when there's this much expectation baked into your company, you can't mess up. However, are they messing up? No, they're crushing it year over year consistently. To see something like this, I think is absolutely phenomenal. And I still kick myself in the head because I bought into them near their IPO, and I think it was like $9 or something like that. Yeah. And I sold out of them when they hit 40, and I thought I was a genius. Dude, if I had just held on to them, it would have been like a 2,000% return. But it is what it is. You live and you learn. Like, nobody thought that Palantir was going to be a 650 PE ratio in 2025. Nobody. There were some people even last year arguing that Palantir is a fake company, fake news. And I thought that was pretty funny because obviously, based on the numbers that they're producing, they're anything but fake. Their Simon Property Group, which between you and me, I'm kind of bullish about them because their real estate portfolio is primarily like strip malls, outlet malls, and those traditional and conventional malls that we grew up in the 1980s and 1990s. If you're a baby watching this channel, I feel bad for you. Like, dude, growing up in the 90s, hanging out with the mall was the real deal. Nowadays, I don't know what the kids are doing. I feel like a lot of them are more indoorsy, right? Like they're glued to their phones. But yeah, I feel like anyone born in 1995 or older, we're the last generation to really experience what it is to just be present in the moment. And I think that classifies as millennials and Gen X and the boomers. I think anybody who's in Gen Z, Gen Alpha, and all these kids these days, dude, they don't know what it's like to just be in the moment. But anyway, Simon Property Group, pretty bullish on them. I like REITs. I think a lot of people dismiss REITs because they don't understand the landscape of their industry, but the real estate space outperforms the S&P 500 year over year consistently on average, historically. But I think for the past, 3.5 to 4 years, the REITs have just been absolutely shattered. And so consequently, they're not outperforming the S&P 500 anymore. But up until 2020, the REITs used to outperform. So knowing that data and knowing that one day the rotation of big money is going to go back into the REITs, for me, if you buy into the REITs now, it makes perfect sense. Okay, that's what I'm doing. I'm not telling you what to do, but that's what I've been doing. I've been doubling down on an industrial REIT known as Rexford. They operate in Southern California. And then, because believe it or not, California's GDP is bigger than a lot of the small countries in Europe. I'm not joking when I say that. Look it up. California's GDP is ridiculous. And then also Realty Income Corporation, which is a commercial real estate company that pays a monthly dividend. But anyways, like I said, there's going to be a crap ton of pharmaceutical companies and we're just not going to look at them, okay? Not interested in any of them. You can't convince me otherwise. Wayfair. I wonder how they're doing. Do you guys remember this Wayfair? They were the e-commerce furniture company. Oh my gosh. The earnings per share is negative $2.88. Trading multiple is a 95. Dude, I would never, ever buy furniture online because I'm one of those old-fashioned, I don't know if I'm an idiot for this, but I prefer to sit on a couch or lay down on a bed and to test it out before buying it. I just can't take the risk. Oh my goodness, this is offensive. Their revenue, I guess it makes sense. During the pandemic, people were buying their furniture online because everything was shut down. But look what happened to their top line since 2020. It's just been decreasing year over year. This is a hot mess of a company. I would, if you're invested into them, you got to let me know, like, what's the investing thesis for a company investing into Wayfair when they're unprofitable? They're losing money in order to operate the business. And I know that because their earnings per share is negative $2.88. And then we can verify that by their cash flow statement. Oh, they're actually positive. Wow, I'm riddled by that. That means they're operating at a loss on an accounting basis. So, Wayfair, I mean, it still goes. I still wouldn't invest into them. But if we go back to the list for Monday, because there's a lot to cover, right? Let me see if there's anything else that's worthy of calling out and for us to investigate together. By the way, is the jacuzzi getting a little cool? I think we need to make it. Dude, that's something that I want. I mean, there's a lot of things that I want, right? I want to eventually own a house. I want to be able to coach my kids as they play their various sports. But I definitely want a jacuzzi as well. Because something weird about me is I'm a practitioner of the Wim Hof method. I do cold baths, I do the breathing technique, I do stretching, I do all that crap. And a benefit is the jacuzzi, it's kind of like you get the effects of the sauna, but also it just feels really good. But I heard that that's a natural way to just, I don't know if this kosher or not to say, but you know how like for male fertility, you want to keep your gonads at the right temperature, right? So it doesn't cook everything in there. I heard that if you go into a sauna or into a jacuzzi multiple times a week, you're not going to be able to conceive. So I heard that's a one way to do male fertility. By the way, this is not science. This is just what I heard. Eventually, I think I will look into it to see if that's true or not, but it kind of makes sense because that's why the gonads hang outside of our body so that our juice can stay regulated. Okay, I don't want to talk about that. I'm getting grossed out. Anyways, hopefully someone can fact check me because I don't know if that's true or not. Like, does it actually fry our juice? I feel like it does. Anything below 1 billion, I don't really like to look at because then it's to that small cap, micro cap territory. And the reason being is when a company doesn't have a high valuation in the stock market, it swings. There's a volatility aspect to it. I'm not really a fan of that. Oh, what the heck? Vimeo? This is the only real competitor to YouTube. And I really wish, oh my goodness, they're down by negative 92% all time. Oh, they're one of the companies that debuted during that SPAC frenzy, during the IPO frenzy during the pandemic. Yeah, this is not good. And the reason why I wish a company like Vimeo, how do you pronounce this? Venmo? No, oh my gosh. Vimeo. I wish more video sharing platforms would come and challenge YouTube. And the reason why I say that is very recently, at the end of July, YouTube had a glitch where they weren't showing ads on videos that were uploaded at the end of July. And some of my best performing work, I didn't make hardly any money. Now there's ads playing, and so I'm making money now, but during that initial surge and where all the views were piling in, I missed out on it. And it kind of pissed me off to think like they can get away with it. They literally didn't even apologize. They're just like, hey, the ads weren't showing, so we can't really pay you. Because how can we pay you if there were no ads shown? And it makes sense objectively on paper, but it kind of rubbed me the wrong way. Like, at least apologize, right? Or to make up for it, for those affected videos, because I think YouTube, or the parent company is Google, they take a big cut, right? They take like 65, 70%, and then the creators get like 30% or 35%. I don't really like that. It should be like 50-50. So what I'm trying to say is, for the videos that were affected, to rectify the situation, they should at least make the ratio the other way. Whereas the creator can get like 70% of the ad revenue and then YouTube gets 30% to make up for it. But they're not going to do that. And for me, I spent a lot of time and energy making those videos. And some people say time is the most valuable resource. I kind of agree with that. But there's also people out here who spend thousands of dollars to produce a video and upload it at the end of July. They're also not going to be compensated. So when I think about the ones that spent $10,000 on a professional editor, a video filming team, and the ones that have like 20 people helping them run their YouTube channel, for them to also not be compensated, I'm sure they're more pissed off than I was. Dude, I was straight up livid for 2 hours. That's probably the best workout that I had, because I instead of taking it out the wrong way, I decided to just work out. And I worked out for 2 hours straight with straight anger. Like the first time that you had a breakup where you got dumped by a girl that you were in love with. Do you remember that sense of like negative feelings of hurt, sadness, despair? Like, that's what I felt. But anyways, I'm sure most of you can't relate to this, so I'll just move on. Tuesday, we have AMD. Big expectations baked into them because their revenue is supposed to go up by 27% year over year, whereas their earnings per share is supposed to go down by 42%. Riddle me that. Unfortunately for me, I'm going to connect the dots here. Remember how I told you I bought into AMD beginning of this year? I did not hold on. I sold out of them once they hit like 140, 142. So I was like, you know what? I need that capital right now so that I can pivot into some of the other companies that I was eyeballing. So Caterpillar, I'm not really bullish about Caterpillar. I think if you're going to go with an industrial machinery company, I sound like a broken record, but I think the one that you should look into is Oshkosh Corporation. I think their future looks pretty darn bright. Whereas for Caterpillar, I don't know. I feel like they do a lot of don't they make a lot of their stuff from overseas and then import it over here? And look at their expectations for their company. So I don't know. I'm not too bullish about Caterpillar. There's Eaton, we talked about earlier, and Arista Networks, Pfizer. Dude, Pfizer. Well, let's take a look at this. Negative 23% past 1 year. Negative 35, oh my gosh, negative 35% past 5 years. So right now they're $23, almost the same price as Intel. Take a look at, oh my gosh, friends and family. They're basically the same price that they were back in like 1997. Case in point, why you do not invest into the pharmaceuticals. Very cyclical, and it should be up and to the right. This is exactly what you do not want to see. Mount Everest right here, and then Mount Rainier. Right? You don't want to see two mountains followed by two valleys. That's absolutely ugly. You just want to be seeing it growing slowly up and to the right, like Proctor Gamble that we looked at earlier. I'm not going to lie, though, like the dividend profile is kind of juicy, right? 7% dividend yield, but the payout ratio being 120%, it's absolutely going to be cut anytime soon. It's pending. And I wouldn't be surprised if the leadership team actually does say, hey, we're going to have to cut the dividend during that earnings. I'm not a betting man, but I wouldn't be surprised. There's Duke Energy. They were covered in the electric utilities industry video that I uploaded. Dude, I spent literally like 40 hours making that one video. So if you do have the time, I would check it out. I'm super bullish about the utility sector. I know a lot of people are only paying attention to Palantir, Big Bear, and some other AI stocks, but I'm trying to pay attention to the sectors that are neglected right now, the ones that are a little smelly. They haven't had a bath in like a week or two, because eventually they are going to get recognition and they're also going to be pumped. Not pumped in like a short squeeze, but meaning the money will rotate out of NVIDIA and Palantir eventually and then go back to some of the value stocks like the utility sector. So I'm super bullish about them, and their dividend profiles, absolutely gorgeous and sustainable and stable. Let's see, is there anything else here? I mean, there should be, right? I mean, how many we got? We got 306 companies. Let's speed run this, see if there's anything worthy of calling out. There's Aflac, an insurance company that should have been included in my insurance industry breakdown video, but unfortunately, they did not meet the cut. And I forgot what my petty reason was for cutting them, but there's Coupang, which is the Amazon e-commerce of South Korea. And I also think they have operations in Southeast Asia as well. Super bullish about this one. Now, I usually do not invest into international stocks because I'm an American, even though I live in Japan, but Coupang is the one deviation from that rule. And I am invested into them in my Roth IRA, and I'm up pretty big in the green. I believe in their future and their mission. They're copying the Amazon playbook one for one, meaning Coupang has their own streaming service, copying Amazon Prime. They do same-day delivery. Everything that Amazon is doing with like the cloud infrastructure as well, Coupang is copying. And you might dismiss the South Korean potential market, but there's a crap ton of people that live in Korea. So pretty bullish about their future, and it's a startup. Their future is just getting started. So I see a lot of potential in them. There's Yum Brands, the parent company of KFC, Taco Bell, and Pizza Hut, which, mind you, I'm going to be honest with you, once they changed their leadership and their priorities from being a US-based company to China, I kind of lost interest in them, but they do seem to be performing pretty well. Let's see, Toast. This one I absolutely love. It's just, take a look at their numbers. So they do software as a service for the restaurant and fast food space. So the stuff that you have in your register, your menu, everything related to running a food operation, they do, right? Their numbers look phenomenal, but what is not phenomenal is their valuation. 185 PE ratio. For me, I'm patiently waiting because I'm trying to buy into them when they hit around $25 to $30 a share. Are they ever going to hit that number? I don't know. But if there is a correction like there, oh man, they did hit that correction back in April. But back in April, I went all out. I put everything that I had to my name into Microsoft, and that worked out pretty well. But yeah, Toast, they are on my watch list, but they're not like number 1 or number 2. Meaning, all else being equal during a sell-off, they're not company number 1 that I'm buying into. I think Toast is probably like in the top 30. But still, I think their future, I think their fundamentals, and I think, see, they were unprofitable up until 2023, and now they have 25 cents per share, bottom line per share. When I say per share, I'm talking about shares outstanding. And I think if we scroll up here, I can show you what I'm talking about. Shares outstanding, 577 million shares. So to have profit per share, for me, I like to see that. And that's why I think the biggest takeaway for this video should be everyone, if you are invested into stocks in the stock market, you should have a watch list, meaning like a spreadsheet. Use the integrated Google Finance watch list. Use something to keep track of stocks. That way you don't have to be paying attention every single day. Rather, you can monitor it every so often. And then when you see a stock on your watch list way below its inherent worth, then you know you should pay attention, and maybe it's the opportunity to dollar cost average. Just a tip, okay? And on my watch list, I have like 100 different companies, and you might be like, how do you keep up with 100? I don't. I do my due diligence and research, and then once I really like a company, but I think they're overvalued, I add them to my watch list, and it's like fishing, right? You have to be patient in the stock market. If you get FOMO, the fear of missing out, and you get emotions, and you see a stock that's going up to the moon, and you're like, oh my gosh, I gotta buy in, and you catch them at their absolute highs, you're gonna be hurt. Case in point, talk about Big Bear AI, right? I made a video about them very recently. You saw them going up to $8 a share. You panicked and you bought into them. Dude, you would be a very pissed off person right now. Your portfolio would be down by negative 13%. And I bring Big Bear as an example because you want to be patient like a fisherman. You don't want to just use your emotions to fuel your decision making, especially in your personal relationships as well. If you're angry, if you're very upset, you're not in a position to have a conflict resolution, right? You need to calm yourself down first. That's something that I learned the very hard way. So I know when I'm emotional, I'm in no position to be replying to YouTube comments or to de-escalate a situation or to try to be the bigger person when I'm emotional. I need to go take a walk, do some deep breathing. I need to listen to music. I need to calm myself down. But anyways, all that to say, be patient. So on my watch list, if I see a company go below the inherent worth price or near it, then the light bulb goes on for me and my spreadsheet changes its color and says, hey, this one you should pay attention to. So that's how I keep track of 100 different stocks. You don't have to be crazy like me. You can only, I don't know, just look at maybe like 5 at a minimum, right? Whatever it is that fancies you, like Berkshire Hathaway, maybe Microsoft, maybe a little bit of Apple, maybe a little bit of, I don't know, PepsiCo. Keep it all on your watch list, and then when the price gets lower, then you can pull the trigger. It doesn't take that much effort. Be honest, it doesn't take that much effort. If you know all the statistics of an NFL team's performance for the past 20 years, why can't you keep up with at least 5 businesses, right, that could potentially become dividend compounders with cheese? All I'm trying to say, all right? The earnings per share expectation is supposed to be 18 cents per share for this quarter, an increase of 800% year over year. The expectations are pretty high for Toast. If they do go on a sell-off, I am going to pull the trigger. Unless their inherent business model changes and they're like, hey, we're exiting the restaurant space, and now we're going to start selling handmade blankets for toddlers. If they do something like that, obviously I'm not going to be investing into them. But if they have like a small mistake or they messed up just a little bit, I'm buying into them. Oh my gosh, that was a lot, wasn't it? Ball Corporation, they used to be, I feel like, okay, let me see if I can speak from memory. They used to do defense contracting work for the aerospace industry, but they also had mason jars and aluminum cans. And not too long ago, I think like a year or two ago, they sold that portion of their business. I forgot which part they sold. So let's click on their profile to see what they do. Okay, so now they double down on packaging. They have exited the defense and aerospace altogether, which to me, I feel like that was the wrong call, because I'm super bullish about the defense stocks. So for Ball Corporation, they used to be in my portfolio, believe it or not. And then I sold out of them once they made that decision. That's why I'm saying it would behoove of you to stay up to date with your investments, because if they change the direction and the strategy of their operations, they're no longer the company that you once believed in. Once they decided to stop doing anything to do with the military, for me, that was my sign to get the heck out of there. So, I don't know. I guess you can learn some things from watching the weekly earnings deep dives, right? So there's Ball Corporation. I'm going to try to speed run because there's so many. The Mosaic, I would never go near them. They do chemicals, pesticides, fertilizers, stuff like that. Aramark, I would invest into, believe it or not. They were responsible for the dining, I guess, capabilities of the college that I went to. And they do prison food, corporate food, college campus food. And you would be like, why would you invest into them? Maybe I can pull it up and show you why. Maximum, they debuted in the stock market 2013, up by 190%. Dividend profile, everything checks out, pretty simple. And let's take a look at their revenue. It's not growing by much, but it's slow and steady, right? So I don't know if I can categorize them as a dividend compounder with cheese. I forgot what the investment thesis is. Why was I interested in them? Oh, that's right. So for the past 5 years, things are looking up and good and green. But when you look at them in their entirety, their DNA and history, not so good. But now they have pivoted in their strategy and their financials. I guess if you only look at it from like 2021 onwards, then it's more of an attractive business model. But if you look at everything in its entirety, not so good. So I think the future looks bright, whereas their past was a little smelly, if that makes sense. But they're not on my watch list. Just the company that I was interested in at one point. We have Skyworks Solutions. They do, like 5G chips for your car, for radio systems, basically everything. I kind of see them the same way I think of Broadcom, in that they have a crap ton of patents surrounding semiconductor chips. We have alcoholic companies right here. Skechers, no, absolutely not. Let's see, Triple N REIT, pretty high quality, reminds me of Agree Realty and Realty Income, the exact same thing. Triple N is the triple net lease contract in which the person that's paying rent money to you, they're responsible for maintaining, upgrading, and financing everything to do with keeping the building pretty. I think that's a really good business model for the real estate space. EV player, not interested. If I'm going to invest into an EV stock, I would never invest into Lucid or BYD, GM, none of them. The only one that I would entertain is Tesla, but Tesla right now I don't want to go near because of their involvement with politics. Let's see, anything else? There's another real estate company. I don't think this is a REIT, but they're an actual real estate. Actually, I want to confirm that. Are they a REIT? They're in the real estate space, but I don't know if they're a REIT. I guess you could tell by their dividend profile. No, because if you're a REIT, you're legally required to pay out at least 90% of your earnings, and they don't pay a dividend, so they're not a REIT. Let me see. J&J Snack, private food label company. WK Kellogg, talked about them in the food CPG stocks video that we made. By the way, In that video, we go over all of the food CPG players, like Utz Brands, PepsiCo, General Mills, Hormel, all of them. So if you want to know which ones I feel the most bullish about and which ones are in my portfolio, I truly think you can learn at least 3 or 5 things from that video. I highly suggest you go watch it. The food CPG stocks industry breakdown video. By the way, that's probably my favorite type of video to make. It doesn't really get that many views, but I love spending an entire week of just reading all the 10Ks, listening to all the different earnings calls, and getting to really be familiar with an industry, and then making a video of like the best of the best within that industry. Because I think when you look at a company individually outside of the scope of their peers, they might look attractive and decent, but when you put them to the test against their rivals and competitors, you learn that they're actually a C tier or even D+. They're just average. And that's why I think the industry breakdown videos for me, I learn so much as I do it as well, because I start learning like, wow, the way that you evaluate the XYZ industry is completely different than how you evaluate another sector or industry. And then you learn like which ones are in the S tier and which ones are in the F tier. So I love doing them. It doesn't really get that many views, but I think it just goes to show that I love what I do. If I were to just make content for the views, I would be a sellout, and I think you would be able to hear it in my voice. I'm not passionate about what I do. I just crank AI generated slop in order to just rack up the numbers. And that's just not who I am, right? I think that's why you're listening up until this point. I think you prefer the authenticity, like a genuine connection and someone talking to you as we're playing footsie in the jacuzzi tub. Like, that's why you're still listening. I think some people don't care about that. They don't mind listening to AI generated slop where the entire video from start to finish is just AI. For me personally, I hate watching videos or YouTube channels where you don't even know who the creator truly is. Like, the information might be good, but it's all AI. So I'm like, dude, like, I don't know. So these days I've been really getting into Japanese cars, right? And I've come across a few channels that do what I'm interested in, which is the cars that were made in the 1990s, 1980s, the JDM market. And there's some AI generated content, and I just literally click away. I don't even give them more than 5 seconds of my time. I just leave. And I go to the ones that might not have the biggest or the best production quality, but it's a human. I prefer interacting with and watching effort made by a real human. So maybe I shouldn't be saying this stuff, because when AI takes over the world and robots turn us into slaves, maybe I'll be the first to go. Maybe I'll be the first one to be neutered and to be made an example of, which terrifies me, by the way. Like, not even a year ago, the government and the world leaders confirmed that UFOs were real, right? And there's so much chaos and craziness happening around the world that we just forgot about it. We don't even care. Like, we know that aliens are real and we just don't care. I'm gonna make a dedicated video just for Lockheed Martin, because I invested into them this past week. I think like 2 weeks ago at this point now. I put like $1,000, maybe $1,200 into Lockheed Martin. And I'm gonna talk about why I believe in them and why their market share and economic moat makes me firm while they're trading sideways at like 420, 415 a share. For me, why I feel like this is a good opportunity, why I bought in. And one of the reasons, here's a sneak preview, is as the alien and UFO quote unquote threat and narrative becomes more prominent again, because they usually do stuff like that to mask something else that's happening around the world, right? To distract us. I'm not a conspiracy theory kind of guy, but I think they usually throw curveballs like that at us to distract us. But I think the next time there's like the whole UFO and alien episode, I feel like the biggest winner from that fear is Lockheed Martin. Because how else are you going to fight against a UFO or a spaceship? right? You're going to have to send your best, your brightest, your highest technologically advanced equipment to fight against. And it's really sad because our best jet fighter planes, the F-35s, are probably like Poland and their horseback riders against the Germans in World War II, right? Because they had tanks, and that's how I think of the UFO spaceships. So I don't know how much damage we're going to be able to do, but the company to benefit from it is going to be Lockheed Martin. I know that's so far-fetched, but doesn't it make sense? Like if you're a fearful citizen and you're like, we need to do something about this. We need to protect our children. We need to protect the world. How do you protect the world from space galactic intruders or pirates that are flying these vehicles with technology that would make your head spin? We're going to have to send our best fighter jets against them. Who makes fighter jets, friends and family? Lockheed Martin, ticker symbol LMT. But anyways, I'm not really the kind of guy to go into the story or narrative. I'm more of like a numbers and datas kind of guy, but that will be like the fun fact that I'll throw in for Lockheed Martin, because they do have some more statistics and financials that are compelling. But I think that one will be like a fun reason as to why Lockheed for the future. Okay, now we're in the territory of micro caps of $400 million or less. I ain't interested. Move on to Wednesday. McDonald's, friends and family, you ever win the lottery, you ever come across big money, there's going to be signs. For me, I'm going to be doubling down on McDonald's. They're here today, here tomorrow, and unfortunately for McDonald's, I don't think it's a company that you buy into willy-nilly at any price. For me, I think below $2.90 is a good time to the dollar cost average. Anything above $300, I wouldn't recommend it. For me, I'm talking to me, all right? Wow, their market cap is $200 million, and then Disney is also $200 million. But yeah, Disney, the exact same thing that I said about Apple and their streaming service carrying, or actually Netflix carrying them to be such a high and a fancy premium baked into their PE. The exact same thing that I think of with Walt Disney. Because not only do they also do that, they also have resorts and hotels and amusement parks and intellectual property surrounding all of their franchises like Marvel, Star Wars, Mickey Mouse. So much to like about them, but to be trading at a 20, I think that's diabolical. I'm bullish about Disney. I hate the fact that they were political with their content, but as a business, I believe in them. Uber, Shopify, DoorDash. Man, there's a lot of heavy hitters. Let's see, Airbnb. Oh my gosh. Realty Income is reporting. Okay, they're going to be definitely on my radar. I will definitely be paying attention for Wednesday for Realty Income. If they do want to sell off, for me, the price that I've been dollar cost averaging into them is 52 or below. We'll see what they're currently trading for. So they're 56 right now. So if they hit 52 or below, I'm dollar cost averaging. That's the playbook that I've been doing for the past 3 years or so with Realty Income. Whenever they're below their 1 year lows, that's when I just buy into them. So I think Realty Income, super high quality, here today, here tomorrow. And it's a monthly dividend payer. There's Iron Mountain. It's a REIT in the business of shredding physical documents, but I think they made a pivot now to doing data asset protection as well. So data that is digital. So not just physical documents and shredding it. And they also have vaults all around the US. It's undisclosed where they're located, but they have stuff like paintings, murals, statues, high valuable items that the elite pay Iron Mountain in order to store their stuff. Yeah, can you believe that there's a REIT that does that? That's Iron Mountain. It's pretty cool, right? Carlyle Group, Zillow. Dude, I love Zillow. But do I love them as an investment? Absolutely not. They actually have a peer that's kind of doing the same thing that they're doing. So it's like an online real estate platform, kind of like Amazon, where you can browse, shop, click, buy a house, right? They also have a competitor called Open Door that kind of does something similar, online platform where they buy out your house. So I think it's kind of different, because Zillow kind of caters towards customers, residential customers, whereas Open Door, I think, is kind of like, hey, we want to buy your house. And you could just sell them a house. So it's not a place where you buy the house, it's a place where you sell the house, from my understanding. Duolingo, dude, I just don't buy the hype surrounding Duolingo. Like, I see their numbers increasing by huge amounts year over year, I guess the expectation. But when it comes to learning languages, friends and family, oh my gosh. So Duolingo is an app that allows you to practice, rehearse, and learn a different language. And it's not every language. I used to use them, right? And they only had a catalog of like 15 different languages. I think it's more now, but that's what they do, okay? Their mascot is kind of cute. It's a green bird, whatever. But what I'm trying to say is, why the heck is a language learning mobile app 165 for their PE ratio? The reason why I'm saying that is because as we go forward in the future, I think more and more people are just going to utilize Google Translate on their phone to convey what they want to say. Like if you go, I don't know, a lot of you guys have been coming to Japan as tourists and traveling here because of the weak yen. And I see you guys all the time. You bring your American mannerisms and super rude. I see it and then I just shake my head, but some of you are nice, you're pleasant. But some of y'all just be getting tipsy and acting a fool, where like Japan, there's an expectation. It's a high pressure, peer pressure type of society. So don't act that way, please. Don't treat Japan like it's Las Vegas or whatever. But anyways, what I'm trying to say is, you can just pull open your phone, speak into the Google Translate app, and it'll literally speak to the cash register person, your server, whatever you're trying to say, right? Like AI is becoming more and more integrated into our life, where I just don't see the future game plan with Duolingo. Like, yes, they're posting good numbers, but I'm just not bullish about the sustainability of their future business model with things like Apple Translate and Google Translate. Hopefully someone out there understands what I'm trying to say. Maybe I'm wrong. Maybe I'm wrong. There's Owens Corning, housing, material, building. Let's see. U-Haul, Dutch Bros. Let's see. Planet Fitness, Federal Realty Investment Trust. They were featured in the REIT ranking video. And I've never heard of them before making that video. That's why I like doing the industry videos. You get to learn about who's good, who's bad, and you learn about companies that no one else really talks about. This one, super high quality. Let me see if there's anything. Blue Owl, Sunoco, oil and gas. Let's see. Elf. Wow, Lyft. Interesting. They're posting their earnings. I wonder how they're doing. I was monitoring them for a while, and then I stopped once their stock price shot up to the moon. I was monitoring them really closely around this period right here, March, when they kept just dipping again and again and again. And then once they posted their earnings, they rebounded like a mother. But now it seems like they're going back on that downward trend again. And yeah, maybe I should put them on my radar once again. Maybe we'll circle back to Lyft next week, see what happens. Oh my goodness, guys, isn't this a lot? This is the company that Western Union wishes they could be. It's a it's a cash and money transferring business that's more integrated with mobile apps. And I heard that this is what immigrants prefer. This is what they use to transfer their cash back home in Latin America or in Africa or whatever, whereas Western Union is just kind of slowly withering away. Six Flags. Dude, do you guys still go to amusement parks with your families? I feel like growing up, amusement parks, super popular, but I feel like it's not really a thing anymore. Or maybe that's just my worldview. But I don't know, I've always been a fan of amusement parks, and I heard that. I used to live in SoCal, right next to Knott's Berry Farm, near Anaheim, California. And I heard one of the best life hacks was to get like a season pass when they have those seasonal promotions where they give you like one free meal a day per visit. Because if you live near the amusement park, you don't even have to go on the rides. You could just go to the food court and get one free drink and one free meal. Just a life hack. So if you live near an amusement park, try to look out for those kind of deals and offers. I don't know if they still do that. Speaking of which, I lived in SoCal when I went to seminary. And that's a fun fact that I'm sure a lot of people are like, wait, what? Seminary is basically graduate school where you learn how to become a priest, a pastor, or a missionary. And I actually went to Biola University, which is the Bible Institute of Los Angeles. And the seminary arm of it is Talbot School of Theology. However, did not finish because of my health. Dude, I started getting so sick, I had to drop out. And yeah, the rest is history. But I know a lot of people bag on and hate on California, but dude, SoCal, there's nothing like it. Perfect weather, perfect diversity of food, thought, and people, and the vibes completely different. So, I don't know. I guess I just think very fondly of my time in SoCal. Anything else we got here? Hamilton! They were featured in the insurance industry breakdown video. Anything else on my radar? Roots? Anything else? Pharmaceutical? Let's see. Upwork. Isn't that the business model where you can rent out like an office space for your startup or something like that? Could be wrong, but I think it is that one. Okay, my curiosity. We gotta click, we gotta investigate. That connects business with various... Oh, never mind. It's kind of like Fiverr, where you can find, I guess, talent for whatever it is you need. Yeah. So what's that company that used to not sell, but rent out office space for startups? Do you know what I'm talking about? It was like a really trendy, flashy name, and I think they went bankrupt very recently. Let me see if there's anything. Super high quality BDC right here, Capital Southwest. If you don't know who they are, well, now you know. Capital Southwest, super good. Or at least they're good up until this point. Depending on next week. Might be old news. They might be crap, depending on what they say. Let's see if there's anything crazy. We're in the $900 million territory, small caps, blooming brands. Dude, probably the worst restaurant food stock that you can invest into out of all of the ones you can invest into. Why Bloomin' Brands? Please, no. I think their direct pound-for-pound competitor at Darden Restaurants, so much better than Bloomin' Brands. Objectively, across the board. All right, we're heading into like the weird micro caps that are just like no one's ever heard of, and I don't even know some of these, so... Let's go move on to Thursday. 450. Oh my gosh, guys. We got some heavy hitters. We got Eli Lilly, Gilead, Conoco, Constellation, Parker Hannifin, Motorola, Vistra. They were featured in the video that I just uploaded. Let's see if there's anything else. Oil and gas, Monster, Sempra. Oh, Datadog is reporting. Same with the parent company of Monday.com, which is a project management, I guess, online software. I personally use Asana, but when at my past corporate job, Monday.com was like the SOP. Everybody had to use Monday.com. That way we could be in sync with all the different teams like marketing, sales, strategy, ops, supply chain. I'm not that big of a fan of Monday, but I'm sure they've made adjustments and now the software is better. But I personally like Asana. Block, which is Square. So, you know how I said I'm pretty bullish about the companies that are operating the streaming space, like Apple, Amazon, Disney? I think the one that I'm not bullish about is Warner Bros. Discovery. This is the one where I'm just like, it's kind of icky. And it was a spinoff from AT&T. And their expectation is for their net income per share, their earnings per share, to be negative 20 cents this quarter. So unprofitable. Would not want to go near Restaurant Brands International parent company, Popeyes and Burger King, which, by the way, pretty decent company. I made a video talking about the best burger stocks, and they're represented, and their rating and their evaluation kind of surprised me. And then, yeah, it doesn't, I mean, like, look at this, right? The expectation is for their revenue to be up by 12% year over year, net income to be up by 12% year over year. So when investors and Wall Street says something like, oh, they beat the top and the bottom line, this is what they're referring to right here. The $2.3 billion is their revenue. That's the top line. The top line inherently tells you objectively, is the company growing or not? And the earnings per share is essentially the net income, which is the bottom line. So the earnings per share tells you the profits of the company and if they are operating at a loss or not. So the top and the bottom line. Rocket Lab. There's a lot of hype with this one. Twilio, Shark Ninja, all right. Hyatt Hotel, so I guess Marriott, Hyatt, all of the hotels are reporting, I'm assuming. Solvitum, this was a spinoff from 3M, so that 3M could operate more in a more agile and nimble fashion. I think Solvitum was like their health care products. I want to verify. Yeah, so all the stuff like with their medical and health stuff. I think it's a pretty high quality company and business. I don't own them. I own 3M, and when the spinoff happened, they gave me shares of Solvitum and I sold them at a profit because I like 3M. I don't know so much about Solvitum. So, oh, Texas Roadhouse is reporting. Dude, they're one of my best performers in my portfolio. I'm up like 100%. Yeah, I really like Texas Roadhouse. Kind of a funny high performer. Oh, wow. Shime. They just IPO'd and now they're reporting their first earnings after IPO. And MP Materials is also reporting. Oh, wow. So Thursday's going to be a really big day for like the speculative companies. Interesting. Cereal right here, Post Holdings. My wife, much to my dismay, loves Post cereal instead of General Mills. As a General Mills shareholder, I always try to encourage, the General Mills products to her. And she's like, nah, I prefer, the Fruity Pebbles and the Honey Bunches of Oats and stuff. That's belongs to Post. And I'm like, oh, come on. Because I think General Mills makes some pretty good cereal, right? That's also healthy, but it's all in good fun. I don't care. I mean, I don't think a $5 box of cereal is going to make that much of a dent or an impact to the bottom line of General Mills. Main Street Capital, I think pound for pound, the best business development company that you can invest into. Not only does it come with a high dividend yield, but you also get growth baked in. Because usually you do not get any growth. I'm invested into Ares Capital, Blue Owl Capital, and I think one more, maybe not. But those two have a really good dividend profile, but their growth in the share price is like negligible. But Main Street Capital is just beautiful. That's why I think Main Street Capital is S+++ when it comes to BDCs. And you might be like, then why don't you buy into them? Because I'm waiting for the right price. Remember the analogy that I painted butt naked, a Bob Ross painting? I said, be patient. I'm patient. I'm willing to wait for Main Street Capital to hit the price that I want. If not, I'm okay. There's 100 different companies that I'm eyeballing. SoundHound AI. So if you don't know what this company is, I actually did a deep dive. I just didn't make a video for them yet. I should, right? Wait, what is their trading volume? Based on the trading volume, maybe I will make a video. Trading volume is 25 million shares are traded on the stock market per day on average. That's pretty decent volume. But anyway, SoundHound AI is basically a company that is integrating the voice and to replace hourly workers. That's their business model. So like at a fast food restaurant, when you pull up to the drive-thru window, instead of interacting with someone, you'll interact with AI to order something. Now, do I love that? Absolutely not. Super annoying, especially if you have to make modifications or adjustments to the burger. Dealing with AI, super annoying, okay? However, on a corporate level, there's companies that are buying into their vision and are implementing it into their operations. It depends on the franchisee. Like I think Wendy's has been doing it. They've been integrating it into a bunch of their restaurants, but I think SoundHound, I think their story is interesting, but maybe not compelling. Maybe I'm giving too much away. Oh, there's Grindr, where two bald guys can meet each other online. It's basically Tinder for the people that like to, Yeti. I'm so sorry, but why invest into Yeti? They're responsible for making like those ice coolers, tumblers, mugs. You know what I'm saying? Like, I don't know why you would be bullish about Yeti. Don't get me wrong. I don't own any Yeti, but I looked at it at Target. Pretty high quality stuff. But as an investment, I don't know. Oh, there's Aspen. They're represented in the insurance industry breakdown video. It's kind of cool to see the companies that I did a deep dive on to be showing up, Peloton is absolutely a no-no for me. Is there anything else here, guys? I mean, there's like 450 companies. There's Yelp. Dude, Yelp is cooked. And I don't like wishing that kind of language to businesses in case someone watching is invested into it and they might be offended or triggered. But like, honestly, they're cooked. Because Yelp is an online catalog of reviews for small businesses, right? Like if you go to the city of Austin, Texas, you'll pull up Yelp to look up a restaurant, or if you want your oil changed for your car, you'll pull up Yelp. Now, in 2025, dude, I'm not even trying to be rude here, but Google, you could just Google whatever city, restaurant, and that's what you use. Because Google has now also introduced a review system where people can leave reviews, photos, 1-star, 2-star, 5-star. They stole the Yelp model. So, yeah, I don't know, guys. Yelp, no. Isn't Trupanion the one that does like pet medicine, like for dogs and cats? I think so. Intuitive, Hertz, Lionsgate. Isn't Lionsgate the production company for John Wick? By the way, John Wick is my most favorite movie right now, but of all time, my favorite movie is Lord of the Rings series. Let me look it up. Lionsgate Studios. I feel like it was John Wick, no? Yeah, it is. Yeah, so they're the ones that helped. Yeah, so Lionsgate. Cool. Let me see. Vital Farms. Vital Farms, they're the ones that sell like the pasture-raised eggs and all organic and healthy. But apparently they got caught lying or something like that. I don't know if that's true or not, and they used to have like all organic grass-fed cow butter, but I think they got rid of that. Actually, I want to look that up right now. Vital Farms scandal. I want to know if... Yeah, so in 2021, there was a class action lawsuit by PETA because Vital Farms misled consumers by portraying its eggs as ethical pasture-raised while... Yeah, okay, I'm not going to read the sentences following that. It was pretty bad. So, not exactly the greatest PR on their record, but I guess with how the consumer trends are pivoting towards like all healthy, natural, organic, I think Vital Farms will make a bounce back. They'll rebound. So I think the name of the game now is no longer having artificial ingredients and stuff like that. I think there's just, yeah. Papa John's, I'm actually invested into them. I still think Domino's Pizza is better than Papa John's, but Papa John's is a close second. Their last earnings, they smashed. They absolutely smashed. And so I think depending on how things go, I wouldn't be against the idea of selling out of them. Because rather than it being a smooth train and a ride, it's been kind of rocky, right? There's highs and lows. We'll see how things go. I think Domino's, especially with the dividend that you can get right now, I think it's not the worst idea to just hold on. So I think I'll just stay put. Goldman Sachs BDC, Cars.com, NerdWallet. By the way, I'm in the market right now to buy a car. And that's why I've been watching a lot of car YouTube. And I've been using Cars.com a lot because I've been looking at cars in the US. Guys, why didn't you tell me that the car market in the US is broken right now? Like, I've been looking at used, like 2015, 2014, like Honda Odyssey or Toyota minivans and whatnot. And it's literally only like $500 off from buying a brand new one. I'm like, dude, what the heck happened to the car market? Goodness. Oh, Berkshire Hathaway's reporting on Friday. This is a company that's on my watch list. And if they go on a dip, if they mess up, I am buying in. Dude, I've been trying to buy into Berkshire Hathaway for the longest time, and I've just been on the sidelines. I think with how much fear and uncertainty there is surrounding this company, I want to buy in while that sentiment is still the majority. Because I think a Warren Buffett-led company, their DNA is not going to become trash overnight. And his lieutenant that he appointed to be the next CEO, they're gonna be just fine. There's Tempest AI. One of my friends from college, she's one of the top, she holds one of the top positions in this company. I want to talk to her one day because Tempest AI is a company that Nancy Pelosi went balls deep into, and then the stock market was like, wait, what? What's Tempest AI? And then it blew up. So, one of these days I gotta reach out to her to be like, hey, how's it going? Hey, so I saw that you're working for Tempest AI. How's that? Oh, it's funny. It's kind of weird in that I have friends and connections all across the S&P 500. And it's weird to think like, and these are friends and connections from my undergrad, right? Like people that I used to study with, people that I used to hang out with. And then there's me, a guy that makes YouTube videos that barely gets 500 views. So I'm like, dang, dude, I don't know what happened to me, but I'm happy, right? I'm happy. And I think by the end of the year, I'll make a update video about like, hey, my progress as a YouTuber, and we'll look at the numbers. And hopefully the numbers year over year, the change will be drastic. Because if we continue the trend of growing and building an audience and a community, maybe I'll have the last laugh. Because right now, I'm sure some of my friends are looking me up on Google or creeping on me, and they're probably like, dude, what the heck is he doing with his life? But I feel like once you become more of a prominent YouTuber with a engaged audience, does that sentiment go away? I don't know, but I feel like yes, right? I don't know. Okay, so it looks like Friday is kind of... Yeah, there's nothing too crazy on Fridays. So, the outro. If you made it to the end, I'm going to tell you, you guys get to know first. I actually opened up my first positions in some Yield Max ETFs this week. Now, remember I did a deep dive looking into them back in March and April, and I was like, dude, I don't want to go near them. Well, things have changed. And I'll be speaking more on that in future uploads. Maybe this week, maybe next week. And I guess this is a really positive note to close out the video. We hit 10,000 subscribers this past week. When it happened, dude, I almost cried. I was like, dude, I worked so freaking hard. I don't think people realize how much research, due diligence, and effort I put into these uploads. I don't just copy and paste what other people are doing. I go against the grain and I make videos that I know won't be viral, but are content that people deserve. Because there's not a single YouTube video out there that breaks down the entire industry space or the HVAC space or the military stocks. But I love doing that. And by doing it my way and getting 10,000 subscribers, dude, I almost cried as like a 30-something-year-old. It feels really, really good. And I just want to say, like, dude, I appreciate the support you give me. Even if you're a silent viewer, follower, you don't even click like or comment, even just by watching the videos, man, I appreciate you. And if you do comment and you click like, dude, that's why you're helping the channel grow by doing stuff like that. So I know it's not just my own effort in doing on a selfish level. It's all of us contributing to seeing this channel become more successful. And that's why I'm so grateful. Like, I have this heart of gratitude of like, dang, dude, if it weren't for you guys, this channel won't go anywhere. Because if you guys did not watch my content, then YouTube would not promote the videos to other people, right? But you choose to watch, you choose to comment, you choose to come back week after week, and you watch the next upload. So, pretty happy. And yeah, my wife and I, we have 2 more months to go until my first kid is born. Yeah, there's a lot on my mind right now. So yeah, I guess we get to close the video out on a positive note. Anyways, hope you guys have a good upcoming week. Good luck in the stock market, and just remember to stay calm, right? If someone cuts you off in traffic, if your project deadline gets pushed back, or something happens in the workplace, dude, just chill, right? Just take a step back, breathe. It's gonna be okay. It's not the end of the world. Regulate those emotions, all right? Love you guys. Peace out.